Welcome to Money Talks. I'm James Shortall, sitting in for Genevieve Westcott with your latest financial news from across New Zealand and around the globe. In this edition, our exports live and die on those all-important global markets. What are the trends and what do you need to know? First off, wholesale interest rates have been dropping, but are borrowers really benefiting? And the milk price issues, there's always plenty to chew over there. Normally I'm the one being grilled on this show, but today I'm turning the tables. Joining me now in studio to talk about the money, the markets and the economy is economist turned director of Financial Focus, Murray Weatherston. Murray, it's great to see you.
Hi James, good to see you too.
So turning our attention to the global marketplace, we've seen a bit of an uptick overnight, but Friday was ugly.
Yeah.
Tell me about it.
Well, I mean, Europe has been bad most of last week. The emphasis seems to have moved away from Greece onto Spain, where they think the banks are all broke and need to be recapitalised. China has been slowing down, but I think the big thing on last Friday was the fact that the US jobs number came out and it was something like 69,000 jobs, which was pretty poor, and that just seemed to send the market into tailspin, really.
So that's meaning that it was much lower than most people
lower than most people expecting. The American economy is running pretty much at an anemic pace. Jobs aren't being created. Unemployment ticked up to, I think it was 8.2%, and things certainly aren't working in the right direction, as far as the markets are concerned.
So let's just talk about a couple of specific stocks. I've got to ask you, did you buy Facebook shares?
No, I didn't buy Facebook shares. I thought they were grossly overpriced, something like 100 times earnings. I find it very difficult to conceive how anything can have a value of that. The Facebook issue, the IPO, very successful for the existing holders. They got rid of the stock at the price that they wanted to. Very bad for the people who got the stock or bought the stock, because they're faced, within the first couple of weeks, something like a 30% decline in value.
Right, so there's a lot of people actually turning their attention to the people, for Morgan Stanley for one. Is this something that's happened before?
Well, normally what happens with an IPO is that the friends and relations get stock, and when they typically it's undersupplied, and typically the aftermarket on an IPO is everybody who's in at the ground level expect to make a lot of money. So if you bought at $34, you expected to get out at perhaps say $40. You don't expect to get out at $26.
Now let's just talk a little bit about what's happening in Europe. We've seen Goldman Sachs actually come out over the past week, and they've said if Europe continues to plague the world, then we could see further falls for share markets. Is that your opinion too? Yeah,
I guess that's right. I mean, Europe as a whole has got an unemployment rate of about 11% at the moment. It seems pretty much in recession. Certainly in the periphery. Places like Greece has got to knock 5.5% of GDP off its government deficit. That can't do anything but force the economy down. There's so much austerity around that one would think that Europe generally is in for a pretty tough time.
Right. So typically we usually see here at home in New Zealand the effects around the world really having a hammering effect on the New Zealand dollar and on interest rates. Talk to me about the New Zealand dollar. What's it been doing lately?
Well, the New Zealand dollar over the last month or so has taken a bit of a tumble. It's not very long ago that it was something like 83 cents US. Today it's something like in the high 75 cents. That's something heading for a 10% fall over time. I mean, I'm one of the people who think that the New Zealand dollar's been overvalued for one heck of a long time, and I've been surprised to see it stay up as high as it has been. But certainly when risk comes off in the world, the New Zealand dollar seems to go down. And the thing I notice about it is it takes a long time to climb up, but it takes a very, very short period to drop, and it can drop a cent a day for 5 days in a row.
So interest rates around the world have been dropping. What are we seeing back here at home?
Well, interest rates here are pretty low as well. I mean, if it wasn't for the fact that the banks needed to get increase their domestic funding, depositors here would be screaming. I mean, it's quite possible here to get over 4% for short-term bank deposits. If the Reserve Bank wasn't requiring the banks to fund more domestically, those rates might be more like they are around the rest of the world, which is sort of in the 1% to 2%. And people are screaming at 3% and 4% here. But what would you be like in the States if you had money in 3 months and you're getting 20 basis points, 0.2%.
Yeah. So the Reserve Bank of Australia made their announcement yesterday. What did they do? What effect was that going to have on us here in New Zealand?
Well, the Reserve Bank of Australia yesterday reduced their equivalent of the official cash rate for the second time. The first time it was 50 basis points. Yesterday it was 25 basis points. They're seeing, sort of a slowing down in the world. The Australian economy is still continuing to be two-paced. The resources sector is quite good, but the domestic, or the retail sector has actually been pretty poor, and so they're just going to take their foot off the brake, I guess, and allow the economy to try and grow a little bit faster. But I think they're generally concerned about what they see is happening around the world, and they also think that inflation going forwards is pretty benign, and so they're not so much worried about that.
Right. So, we've seen turmoil around the world. You're a financial advisor. I've got $100. Where should I put it?
Well, at this point in time, I guess the safest place is going to be in the bank. I personally think the equity markets are quite volatile and quite a risky place to put new money in at the moment. And so, your $100, if you don't want to go to the casino and put it on red, I guess the place I'll be telling you to is put it in the bank.
Good advice. Thanks, Murray. Coming up, drilling down, where does the smart money need to be for rural sector growth in New Zealand? The state of the nation for New Zealand's primary sector. The latest insights from the author of a special KPMG Agribusiness report, Ian Proudfoot. But first, answer this in our Farmers Facts and Figures quiz. According to the KPMG report we'll be talking about after the break, what do primary sector industry leaders believe is their top priority in 2012? The answer when we return, so stay with us. Welcome back to Money Talks. I'm James Shortall, and just before the break we asked you, according to that KPMG report, what do primary sector industry leaders believe is their top priority in 2012? Biosecurity, biosecurity, biosecurity. That's just one of the findings from the hot off the press KPMG Agribusiness Agenda 2012. I'm James Shortall, back with Murray Weatherston, and joining us now in studio is KPMG's Head of Agribusiness for Asia Pacific, Ian Proudfoot. Now, Ian, let's talk about the Agribusiness Agenda. One of the findings that I saw was that you've highlighted some of the key events over the past 12 months. What did you see from over the past year?
I think the trend to me, and with the stories we were focusing on, it's around collaboration. So it's things like the Solaire Alpine Merino initiative that the New Zealand Merino and Silver Farms have undertaken, the Green Shell Mussels, all those sort of initiatives that say people are now starting to believe more and more that they do better working together, sharing IP and looking at how they do win in markets.
Right. So this is the third Agribusiness Agenda. Tell me about how you go about talking to people, the interviews, bits and pieces.
Okay, so there's two parts to the process. We interview people face to face or on the telephone, and we talk to around about 95 people as part of that process. And then a lot of those people also are invited to complete a questionnaire online, and many do that. And that gives us sort of the quantitative information that sits alongside the qualitative things we gain from interviews. So we talked and got contribution from around about 100 people in total.
And what are the key findings?
Well, the key finding to me is that 81% of the people we talk to believe there's a real benefit in having some sort of pan-industry strategy. And, we went into this process, we decided to focus on that because we're seeing it happening around the world an awful lot, and food and agriculture becoming far more strategic. So we felt we'd probably get somewhere between around a third and a half of people that actually felt there'd be some benefit to a strategy. So that level of support really says maybe it's time to start thinking a lot more about whether we do have a pan-primary sector strategy, because markets are getting more and more complex, as you were talking about before.
So where in the world is this sort of thing happening, and what are they doing?
Well, there's some really good examples out there. Denmark has really focused on how they bring together their primary sectors. So now the dairy and pork parts of the Danish agricultural sector work very closely together. They have a very clear focus. They understand where their export markets are, and have really developed a very strong agricultural strategy. They're doing the same in Ireland. The Aussies are going through the process of doing it. You look at Chile and how they've developed a strategy around horticulture, which is all about selling more product to Asia than anybody else. Our key markets, people are targeting those markets with much more coordinated approaches than we are at the moment.
Right. So Murray, we talked earlier on about some of the key findings. Number one priority, biosecurity. What are your thoughts on that?
Well, I think, as an island nation and facing a world where everybody wants to keep our agricultural and horticultural products out. We have to make sure that we don't get any of the nasties in here that would give them cause to say, hey, you've got this particular disease or you've got this particular pest, we're not going to take your produce anymore. I mean, non-tariff barriers are pretty strong in the agricultural sector, and any thought of bugs or whatever is just got to be disastrous for New Zealand. I mean, I've always thought that the worst thing that could happen in New Zealand, if you think of a catastrophe, we've had the Christchurch earthquake that was bad, you'd think of tsunamis and all the rest of it. The worst thing I think New Zealand could ever have was something like a foot and mouth outbreak, because that would just absolutely decimate not only agriculture but the rest of the country. So we have to protect our borders vigilantly.
Right. So one of the areas that I picked up was that foreign ownership didn't even register on in the top 10. So is this really an issue?
Well, maybe not for the farmers, because I think that what they would recognise is that the farmland actually still stays here. I mean, it's not like you've got IP to maybe a manufacturing process where you can pick up the plant and take it away, take all the employment away, take the production away. Farmland is farmland. I've yet to see farmland be exported from anywhere.
It's a good point. It's a good point. So Ian, you also fast forwarded a little bit to give us an idea of what the future might look like. Tell us about some of the sectors and what you foresee as being great opportunities.
So the sector you're talking about is our future focus, the future thinking section, where we came up with some of the ideas people gave us in 2030. And it was really quite enlightening where people's minds are going to. Talking about pooling the back office of the meat processing sector, so they're done in regional hubs rather than having each company operating its own system. Talking about Fonterra,
do you think that's going to happen?
I'd love to see it happen, because it's not the area we compete on. We compete on the quality of cuts and how we market the products. We should be doing the processing side as low cost as possible. So, I think it's a great idea. Whether it ever happens is another issue. But, Fonterra producing 80% of its milk overseas, having a integrity brand that covers almost all our exports, so people know what they're getting when they get New Zealand product inside what they're buying. So I think there's some really great thinking there. But the reality is none of that will come to fruition unless we collaborate. And collaboration is just so central to everything that this sector really needs.
So one of the other things was developing industry leaders, developing capability. How do we do that?
Well, we've got it's fair to say, a dearth of talent, and that came through very loudly. But, having told people for 20 years the industry's sunset, people haven't seen it as a great career opportunity. The strategy, to my mind, gives people a real vision of where the sector could go, and actually can create a message around how exciting a career can be in the primary sector in agribusiness. So I think it's actually very important it all goes together to get the right talent into the industry, so people can believe they've got a career on the edge of science, or in a global marketing role, or one where they're running a very sizable business in their own right, being their farm business. So if you can actually portray how that's going to fit into a much bigger system, how we're going to create that value for the economy and for the individuals involved, it's important.
Over the past week, the Commerce Commission came out and said that they're okay with Fonterra's milk price. Are they the right people to be determining that?
Well, by law, I guess the Commerce Commission has got the job of doing it. In a free market, I guess, the milk price would be what the milk price would be. We actually have a monopolistic producer, effectively, of milk, and so someone has to watch over the shoulder, I guess, of the monopolistic producer.
Coming up after the break, future-proof on the highways and byways of the economic world as our experts tell us what they'll be watching out for in the week ahead. And as we head into the break, answer this in our Farmers Facts and Figures quiz. How many exhibitors will you be able to see at New Zealand's 44th National Agricultural Field Days at Mystery Creek, kicking off on June 13th? The answer when we return, so don't go away. Welcome back to Money Talks. I'm James Shortall with Ian Proudfoot and Murray Weatherston. Just before the break, we asked you, how many exhibitors will you be able to see at New Zealand's 44th National Agricultural Field Days at Mystery Creek? The answer, 1,000 exhibitors are lined up, waiting to show you their finest at National Field Days, running from June 13th through to the 16th. And Ian, I know the KPMG are always there. What can we expect to see from you this year?
We're having a slightly lower profile this year, but what we will have is an awful lot of people on site getting out and talking to our clients and actually getting out and trying to understand where their businesses are going. You know, that's the benefit of field days from my perspective. It's a great opportunity to meet people and catch up with people you don't necessarily see on a day-to-day basis. So we're going to have about 25 to 30 people, including all of our executive on site on the first Wednesday of field days. And we're really looking forward to seeing as many of our clients and as many people that want to talk to us about the agribusiness agenda as possible.
So if there's viewers out there, they can come and ask you a few thorny questions?
Yep, we're all going to be wearing KPMG branded clothing, so we'll be around the site and ready to talk about anything.
Brilliant. Now, Murray, you know, what do you think? A farmer's going to be feeling pretty flush at the moment? Are they going to have their checkbooks out, or what's the story?
I suspect that farmers will be like the rest of the community, and they'll be pretty cautious. I think the milk price has come off a bit. The dairy prices have been very strong for a number of years, and we know that they're cyclical. We'd have to be pretty optimistic to think that dairy prices are going to go back up again and stay where they are. I think farmers are just going to be faced like everybody else with, you know, the uncertainty of what's going to happen in the world.
So speaking about the milk price dropping, I noticed that Synlait Limited weren't able to sell 70% of their farming enterprise. Is that, you know, is this a direct relation of what's happening with milk prices at the moment?
I think there's probably more, and we talked earlier about the foreign land ownership issue. I think that's probably playing a little bit more. But, you know, that's a large parcel of farms they were looking to sell. And in terms of capital availability, it's most likely that capital would be coming out of Asia to buy those farms, at least in the short to medium term. And I think people are a little bit nervous in terms of coming in and trying to invest in New Zealand. They've seen what's happened around the Crayford situation, and they're probably just taking a step back until the situation calms down a little bit.
It's pretty clear that the national government is intent on selling 49% or up to 49% of the electricity companies, Solid Energy and Air New Zealand. I think it's a doctrinal position that they've got. They're certainly going to be encouraged by the investment banks and the share brokers and all the rest of it, because they really want to, you know, see some floats happening, because they're not happening anywhere else. My pick is that the first one will be underpriced so that it's successful. This is going to be a political process as much as a financial process. They want the mums and dads to, you know, open up their wallets and buy a few shares in them. They want the price to be, in the aftermarket, to be higher than what the issue was, because, you know, one thing like you can be pretty certain of is if Mighty River Power doesn't sell well and there's a gain on listing, they'll have real difficulty with the rest of them getting rid of the shares to the mums and dads.
So over the past day, we've seen Qantas come out. They've slashed their payout, you know, their forecasts for the year. I mean, this has got to have an impact on the sale of Air New Zealand, right?
Yeah, that's right. Well, I think you've really got to go back. The government ownership of Air New Zealand isn't because they wanted to run an airline. They basically had to rescue the airline. The Air New Zealand would have gone bust if the government hadn't come in. So the government was really an unwilling owner of Air New Zealand. I actually think it'll be the most difficult one for them to actually sell at any, you know, reasonable price. I mean, I like the great comment that I think it goes back to Warren Buffett, where he told his sidekick Charlie Munger that, you know, Charlie, if I ever look like I'm going to buy into an airline, would you please shoot me? And, you know, nobody has made money out of airlines, it seems, you know, anywhere in the world. Maybe some governments, for their own purposes, have come and introduced airlines, etc. But the airline business isn't a great place to invest in. I don't think it ever has been.
Right. So if we look around the world, some of the big issues for markets are, of course, coming out of Europe. But, you know, what is it? We're talking about Greece. What does it really mean if you know, if Greece does go out of the euro? Then what does it mean for Greece as a country?
For Greece as a country, I think it's probably quite dramatic. I think the austerity measures that they've been asked to take would be a walk in the park compared to probably what they'd have to go through if they decided to re-establish a drachma. But I think for the rest of Europe, the key issue from our perspective is what does it do to our export markets? And that level of uncertainty, you can already see, you know, the UK's in recession again, be it a technical recession, and that's with the Olympics coming. So with a wave of spending coming through in the UK around that. Germany's got concerns being able to bail everybody out, and that limits their ability to come out and buy our products. So, you know, there's all this talk and continuous talk about how Asia's our key market. everything that's happening in Europe is just reinforcing that from my perspective, and meaning that we need to spend more and more time really understanding those Asian markets and still trying to identify where there's the value components of European markets that will still provide good returns to us.
It's interesting you point out that Asia is a key market for us. Just over the past week, then there's been a new private wealth report that's come out and saying that the new millionaires are all coming out of Asia. The focus is going to Asia, and in fact, up to 17% of Singaporeans are now millionaires. I mean, is this where we're going to be seeing all the growth for agriculture?
That was amazing, wasn't it? Yeah, how can you have that many millionaires? And I assume it's all in property, but. There's going to be big growth, and looking at it from my Asia Pacific hat on, it's very interesting. The issues in each country are very, very similar. They're all about sustainability of food supply, how they secure enough food, and they've all seen what's happened around the world in terms of some of those risings that happened last year, which cost 4 or 5 governments their positions. So, I think agriculture is becoming a far more corporate game, and I saw some interesting stats. I think about 1% of global funds are currently invested in agriculture. I think that's going to increase, and the view is that will increase towards 5% over the next 10 years or so. So it's going to become far more corporatised, and therefore the parameters change as to how we do agriculture.
So that's going to be a trend that we're going to see here in New Zealand as well, more corporate farmers.
Absolutely, and I think it's really important people are aware, as our corporate farming system evolves, then whether you're a vet or you've been a rural supplies company or you're doing rural accounting, your whole business model is going to have to change, because what your customers are going to want is going to be different. So there's a real view that the world is evolving very rapidly.
Murray, what are you going to be looking at over the next 7 days?
Well, I think we've just got to keep looking to see what happens in Europe. Greece seems almost to be a sideshow at the moment. Their election's due on the 17th, and we'll see what happens there. But the bigger problem seems to be...
Actually, one of the banks, interesting to point out, one of the banks came out with a report just recently. They're saying that unemployment could rise to 1 in 3 in Greece if they exit the euro. Their currency is going to drop 70%. Are these all accurate?
Well, I mean, nobody really knows what is actually going to happen. The Greek problem is one where they're basically uncompetitive at the current cost and productivity level. And in the old days, you had 3 weapons. You could either reduce your domestic costs, you could increase your domestic productivity, or you could depreciate the currency. Now, the Greeks can't depreciate the currency, so therefore they're going to have to slash their costs or increase productivity. We know that most of the time you can't increase productivity, quickly in a very short period of time. How do you enforce a 30% wage cut for everyone to get your costs down? And it's really uncharted territory of how does the European situation work itself out.
We are starting to see a real change in the political atmosphere in Europe, I guess, with these austerity measures. Are we going to see a continuation of this in future?
I think so. Although it's interesting, obviously voters don't like austerity, and you can see that with what's happened with France with the change in government there. And suddenly, somebody winning the presidency on the basis of anti-austerity, pro-spending, and this view spend the way out of economy or out of this recession. I think there is a need to take the pill, and the sooner we start taking the pill, probably the faster we'll get out of this mess that we're in at the moment.
So I know you're going to be at Field Days next week, but what else are you going to be looking at?
I suppose I'm spending next week pretty well around the country, talking to groups about the agenda, so I'm really looking forward to getting out and getting feedback on what we've written, and hoping to see more people committing and being prepared to look at opportunities to collaborate and to explore a strategy. So
what sort of industry groups are you going to be talking to? Government, are they included?
Yeah, so we're talking to government people, farmers, industry leaders, right across the spectrum of people involved in the industry. So it's a great opportunity to get some real direct feedback on what we've put a lot of time and effort into. And
the feedback so far has been pretty positive?
Very positive. We've been very pleased with the feedback, and a very consistent view that where we're pointing to in terms of a direction for New Zealand is one we have to think about very seriously.
Thanks, Ian. Thanks to my guests, Ian Proudfoot and Murray Weatherston. Be sure to check out our website at country99tv.co.nz for the latest news and programming. Meantime, wasn't it the actor Christopher Reeve, Superman, who once said either you decide to stay in the shallow end of the pool or you go out into the ocean? So for those of you who can't afford that Fijian holiday right now, this one's for you. Thanks for watching. I'll catch you at Field Days.